you're thinking about buying your first home, stop what you're doing right now. Because I'm about to show you 7 mistakes that could literally cost you tens of thousands of dollars, and most first-time buyers have no idea they're making them. My name is Grant, and in the last 5 years, I've helped hundreds of people navigate their first home purchase. And let me tell you, the mistakes I see people make over and over again are absolutely heartbreaking, because they're completely avoidable. Stick around because mistake number 6 alone could save you $1,200 every single year. Look, buying your first home should be exciting, not financially devastating. But here's the reality. 33% of people who want to buy homes right now can't even get started because they've already made critical errors before they even begin house hunting. And the ones who do make it to closing, they're often paying way more than they should have. Today, I'm breaking down the 7 most expensive mistakes I see first-time buyers make, and more importantly, I'm giving you the exact strategies to avoid each one. So grab a pen and paper, because this could literally be the difference between getting your dream home and getting financially wrecked. Mistake number 1 is the big one, and it happens before you even look at a single house. You're not doing a real budget analysis. Here's what most people do. They go online, see that houses in their area cost around $400,000, figure they need about 20% down, that's 80 grand, and think, okay, I need to save $80,000. Wrong. That $400,000 house? You're actually looking at closer to $110,000 up front. Here's the breakdown that nobody talks about. Down payment, $80,000, but wait, that's if you go conventional. Closing costs, $8,000 to $24,000. Moving expenses, $2,000 to $5,000. Immediate repairs and furnishing, $5,000 to $15,000. Emergency fund buffer, $10,000 to $20,000. And here's the kicker. Most first-time buyers qualify for programs that let you put down as little as 3%. On that same $400,000 house, that's only $12,000 down, not $80,000. But nobody tells you about these programs. The fix? Use a proper affordability calculator that includes all costs, not just the down payment. And research first-time buyer programs in your area. Mistake number 2 is treating your credit score like it doesn't matter until you're ready to buy. This one makes me cringe every single time. Let me give you a real example. 2 buyers, same income, same house, same everything. Buyer A has a 760 credit score. Buyer B has a 650 credit score. On a $320,000 mortgage, Buyer A gets a 6.8% interest rate. Buyer B gets 7.9%. That's over $200 more per month for Buyer B. Over the life of the loan, that's $72,000 more. $72,000 because they didn't spend 6 months improving their credit score. And here's what's even worse. While you're house hunting, people are opening new credit cards, financing furniture, buying cars. Every single one of these hits your credit and could cost you thousands. The fix is simple but requires discipline. 6 months before you start seriously house hunting, pull your credit reports, dispute any errors, pay down credit card balances, and for the love of all that's holy, don't open any new accounts. Mistake number 3 blows my mind because it's so easy to avoid, yet 80% of first-time buyers do this. They get a mortgage quote from one lender and think they're done. Guys, this is literally the biggest purchase of your life. Would you buy a car from the first dealership you walked into without shopping around? Of course not. Freddie Mac research shows that comparing just 2 lenders saves you an average of $600 per year. Compare 4 lenders? You could save $1,200 annually. On a 30-year mortgage, that's $36,000. I had a client last year, let's call her Sarah. Her bank offered her 7.2%. She almost took it because, quote, they've been good to me for years. I convinced her to get 3 more quotes. Best quote came back at 6.6%. That 0.5% saved her $847 every year. Here's your action plan. Apply to at least 3 different types of lenders, a big bank, a credit union, and an online lender. Do all your applications within 30 days so it only counts as 1 credit inquiry. And watch out for lenders who pad their rates with discount points to look competitive. Mistake number 4 almost cost my friend his dream house, and it's more common than you think. Picture this. Jake finds the perfect house. Great neighborhood, perfect price, everything he wanted. He puts in an offer and gets rejected. Not because his offer was too low, but because he only had a pre-qualification letter, not a pre-approval. Here's the difference, and it's crucial. Pre-qualification is basically a lender saying, yeah, based on what you told us, you might qualify for a loan. Pre-approval means they've actually verified your income, checked your credit, reviewed your assets, and they're saying we will lend you this money. In competitive markets, sellers won't even look at offers without pre-approval. You're essentially bringing a water gun to a knife fight. But here's the pro move most people miss. Get pre-approved with multiple lenders. This lets you compare not just rates but also how quickly they can close, what their requirements are, and which one you actually want to work with. Get pre-approved before you start seriously looking at houses, not after you find one you want. And make sure it's actual pre-approval with full documentation review. Mistake number 5 is what I call house poor mentality, and it's absolutely devastating to your financial future. Here's what happens. The lender tells you that you qualify for a $500,000 house. You think, great, I can afford $500,000. Wrong. The lender is telling you the maximum they'll let you borrow, not what you can actually afford to live with comfortably. Let me break this down with real numbers. You make $80,000 a year. The lender might approve you for a $400,000 house with a $3,200 monthly payment. But after taxes, insurance, utilities, maintenance, and basic living expenses, you're left with maybe $200 a month for everything else. No vacations, no emergency fund building, no retirement savings. Your house rich but cash poor. I've seen people become prisoners in their own homes because they can't afford to do anything else. They can't go out to dinner, can't take vacations, can't handle any financial emergency. That's not homeownership, that's financial stress with a mortgage. The rule I tell all my clients: take whatever the lender approves you for and subtract 20%. If they approve $400,000, shop for $320,000 max. This gives you breathing room for life, emergencies, and actually enjoying your home. Mistake number 6 could literally cost you your life savings, and I'm not being dramatic. Story time. My client Mike bought what looked like a perfect house. Beautiful kitchen, great location, move-in ready. He waived the inspection to make his offer more competitive. 6 months later, he discovers the foundation has major structural issues. Repair cost? $85,000. $85,000 because he wanted to save $500 on an inspection. But here's where most people mess up even when they do get inspections. They get a basic inspection and think they're covered. Standard inspections don't test for radon, mold, pests, or structural engineering issues. They're basically just looking at what they can see. Here's what you actually need to do. Always attend the inspection yourself. Ask questions. Take notes. And depending on the house age and your area, consider additional inspections for radon testing, mold inspection, pest inspection, sewer line inspection, and structural engineering if there are any foundation concerns. Yes, this might cost you an extra $1,000 to $2,000 upfront, but it could save you tens of thousands in surprises later. And if major issues come up, you can negotiate with the seller to fix them or lower the price. And finally, mistake number 7, the one that catches almost everyone off guard. Ignoring the true total cost of homeownership. Most first-time buyers calculate their budget based on principal, interest, taxes, and insurance, your pity payment. But that's like budgeting for a car and only considering the monthly payment while ignoring gas, insurance, and maintenance. Here's what homeownership actually costs beyond your mortgage. Property taxes that go up every year, homeowners insurance that increases annually, PMI if you put down less than 20%, HOA fees if applicable, utilities that are higher than apartment living, maintenance and repairs, budget 1 to 3% of your home value annually, landscaping and yard care, and emergency repairs that will happen. On a $350,000 house, you should budget an additional $400 to $800 per month beyond your mortgage payment for these costs. That's $5,000 to $10,000 per year that most people never plan for. I've seen people who could afford their mortgage payment but couldn't afford to actually live in their house. They end up defaulting not because they couldn't make the payment, but because they couldn't handle the total cost of ownership. Before you buy, create a realistic budget that includes all these costs. And always have an emergency fund of at least 3 to 6 months of your total housing costs, not just your mortgage payment. Look, I know this seems overwhelming, but here's the truth. Every single one of these mistakes is completely avoidable if you just know what to look for. The difference between buyers who build wealth through real estate and those who get financially crushed is simply education and preparation. You don't have to be the smartest person in the room, you just have to be the most prepared. So let's recap those 7 expensive mistakes. Skipping the real budget analysis, ignoring your credit score until it's too late, shopping with only one lender, getting pre-qualified instead of pre-approved, buying the most expensive house you qualify for, skipping or half-assing the inspection process, and not budgeting for the true cost of homeownership. If this video helped you avoid even one of these mistakes, it could save you thousands of dollars. So hit that like button, subscribe for more money-saving content, and drop a comment below telling me which mistake you almost made or unfortunately did make. And if you're ready to start house hunting the right way, I've put together a complete first-time buyer checklist with all the resources I mentioned today. The link is in the description below. Next week, I'm breaking down the 5 first-time buyer programs that could save you tens of thousands of dollars that most people don't even know exist. You definitely don't want to miss that one. Until then, happy house hunting, and remember, preparation beats panic every single time.